There are two things that make up premium price: intrinsic value and time value. So your intrinsic value is the value of an in-the-money option. Options out of the money have zero intrinsic value. Let me give you an example. Let's talk about Chicago wheat. Let's say you're holding a $5 Chicago wheat call. That's a bullish position. And futures are at $5.20. Your intrinsic value is 20 cents because your option's in the money, and it's a 20-cent difference between the strike and where the futures market is trading. Make sense? So then next, the other component is time value. This reflects the amount of money that buyers are willing to pay in hope that the option will expire, be worth exercising at or before expiration. So the time value is the second part of the premium price. You have your intrinsic value and your time value. So I'll give you an example of time value. Chicago wheat, that $5 call, futures are trading at $5.20. Let's say the premium price of that option is 27 cents. So if we know that there's 20 cents of intrinsic value, that leaves 7 cents of time value. Let's break down what goes into time value. There are 4 factors. One is the relationship to the underlying futures contract. So the closer the money is to, the closer the option is to the money and in the money, the higher time value it's going to have. Because there's a probability that that option will expire in the money. Any deep out of the money options will have very little time value because there's a lower degree of certainty that that option is going to expire in the money. Your second is your time until expiration. This is your expiration date. And we're going to look at a chart of time value. But as time's moving along, your time value is decreasing. The fourth and actually most important factor is volatility. Because volatility will lead a market to potentially get into the money or out of the money. So higher degree of volatility, the higher time value. And interest rates, which at this point with interest rates near zero, doesn't really play a huge part. For the most part, interest rates do not play a huge part in commodity options. One thing you should know, I know the Fed, their last meeting in end of June there, they said they were hinting at mid-2015 with an interest rate increase. We'll see if that happens. But you should know that if interest rates increase, time value decreases. But again, that's the least likely of the 4 that are really factor into the time value of an option contract.
This material is conveyed as a solicitation for entering into a derivatives transaction. This material has been prepared by a Daniels trading broker who provides research market commentary and trade recommendations as part of his or her solicitation for accounts and solicitation for trades. Daniels Trading, its principals, brokers, and employees may trade in derivatives for their own accounts or for the accounts of others. Due to various factors such as risk tolerance, margin requirements, trading objectives, short-term versus long-term strategies, technical versus fundamental market analysis, and other factors, such trading may result in the initiation or liquidation of positions that are different from or contrary to the opinions and recommendations contained therein. Past performance is not necessarily indicative of future performance. The risk of loss in trading futures contracts or commodity options can be substantial, and therefore investors should understand the risks involved in taking leveraged positions and must assume responsibility for the risks associated with such investments and for their results. You should carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should read the risk disclosure accessed at www.danielstrading.com. Daniels Trading is not affiliated with, nor does it endorse any trading system, newsletter, or similar service. Daniels Trading does not guarantee or verify any performance claims made by such systems or services. When investing in the purchasing of options, you may lose all of the money you invested. When selling options, you may lose more than the funds you invested.